Ladies and gentlemen, please welcome to the stage the J, the B, Justin Beaton.
How you going? Great, you well? Well, look, just to so you all know, from the very first moment, I'm really not that big of a speaker. That is not my core competence. I've had absolutely no training in public speaking whatsoever. It's just so happened that I've been invited to talk about something that I'm extremely passionate about. While I'm not that experienced when it comes to public speaking, what I do know, what I'm extremely experienced in, and also extremely successful in, is the share market. So I'm here to teach you about the share market. Does anyone know what the share market's going to do tomorrow? What about next week? Next month? What about the next 12 months? No one has any idea what the share market's going to do in the next 12 months. Well, just to reassure you, people pay me hundreds of thousands of dollars to know the answers to those questions. And I have absolutely no idea. Just to reassure you all that I am so experienced in the share market, I have no idea. Absolutely none. Now, I've spoken to around 5,000 people in the last 10 years. And 5,000 people, I've generally asked the same question to the majority of them. And that question is there anyone in the room that has become a millionaire from trading on the share market? Raise your hand. Look around. No one has made money from trading on the share market. No one has become a millionaire from trading on the share market. That's a really interesting statistic, because over 5,000 people, guess how many people have become a millionaire from trading on the share market? Well, there's only been one person that's raised their hand to that question. One person out of 5,000. I was really dumbfounded that there was only one. In fact, I was dumbfounded that there was one that made money from trading on the share market. So I asked the old gentleman to stand up. He came from Newcastle, he stood up, he was at the back of the crowd, and I asked him to share his experience. He goes, well, Justin, it's not exactly what you think. I'm now worth $1 million. 6 months ago, before I started trading on the share market, I was worth $6 million. Now I'm just worth $1 million. Who believes the share market is like a gamble? Be honest. The share market can be just like a gamble. What is the difference between investing in property and the Melbourne Cup? The horse race, the Melbourne Cup. What? Property doesn't die, your horse probably will. I agree with that comment. But you look at property, what is the average holding period for property? 10 years here in Australia. What is it for the share market when it comes to trading? At the moment, it's closer to 7 minutes. 86% of people that trade on the share market lose money. 86% is a huge percentage. Huge amount of mums and dads lose money on the share market, and professionals included. That's because they take such a short-term time horizon. If each and every one of us had the discipline to maintain a long-term view or apply the same mindset that we do to property to our shares, we'll make money each and every time. So all you have to do if you want to become a successful share investor, not share trader, you just have to concentrate on the longer term. Now, I know you've heard from a lot of share traders and experienced share traders over the last few days. I'm not a share trader at all. I'm a share investor. My very first experience in the share market, my mum gave me 1,000 shares in Woolworths for my 14th birthday. Does anyone know what 1,000 shares in Woolworths looks like? It's a piece of paper. It's not very sexy at all. At the age of 14, the bigger the present, the better. I was handed a birthday card. At 14, you get given a birthday card. Who reads their birthday card at 14? Dude, not too many people. You turn it upside down and shake it. And if no cash falls out, you feel like you've been pretty much screwed. I had a piece of paper that fell out that said, yes, I'm now a proud owner of Woolworths shares. It's like, excellent. What does Woolworths, the company itself, do? It sells food, groceries, and all that sort of thing. Well, certainly not sexy, certainly wasn't going to get me too interested in the share market. But what that process was through a process called an IPO. Has anyone heard of an IPO before? Or initial public offering? I was given these shares through the wholesale market pretty much. 2 weeks later, it lists on the retail market, being the share market. So when you buy shares in an IPO, your money that you're investing actually influences the balance sheet of the company you own. When you buy shares on the secondary market, you're just buying something off someone else. It's got nothing to do with the underlying company that you're investing in, believe it or not. So it's through an IPO. I thought, great. I didn't do anything about it. I listed at a 30% premium. Giddy up, made money. But at the time, had no interest in the share market. I liked playing cricket and playing rugby during winter, having a good time. Now I looked at it and I thought, well, I'm not going to do that much with the share market, but I've also got a twin brother. Twin brother, he was quite active at the time. He was also given 1,000 shares in Woolworths. So what he did, he's a believer in that you don't go broke making a profit. So he sold his Woolworths shares, made a 30% premium, and went and bought a stereo, which is what he wanted. Does anyone have kids in the room? What about boys? Are they very competitive? Well, imagine twins. I kicked Scott out of the womb just because he could get there first. Well, not quite. I was racing him to the womb. He palmed me off and he beat me to it. That's pretty much how competitive we are. When it came to 14, when we were given these shares, he'd been working at McDonald's Saturday and Sunday. Sunday wasn't too bad. I think he earned $4.90 an hour, which was double time. So I was having a good time. After the 12 months had passed, I looked at my share portfolio and realised that I had made more money by just holding my Woolworths shares than what he actually had done, working extremely hard at McDonald's. So do you think I made sure he knew about it? I made sure he knew about it. Then I read a few years later the book by Robert Kiyosaki, Rich Dad, Poor Dad. Has anyone read that book? If you haven't, I strongly encourage you to do so. One thing that I took out of that book is that to create wealth, you don't necessarily need to work hard to accumulate money. What you need to do is have your money working hard for you to accumulate wealth. And I thought, I knew those lessons at 14, because that's what I was doing. I had my money invested, even though I wasn't active, I was just holding it and having a good time. Yet my brother was working extremely hard. It was about the same time, there was a stock market game that I participated in, where we were given 100 grand hypothetically. It was run completely across New South Wales, 100 grand to make investment choices over a period of 12 weeks. Well, I turned that 100 grand into $2.3 million in 12 weeks. Now, I'm not too sure what the guy is doing now that beat me, but I'd imagine it's got something to do with the share market or investing. Because for me, even though I came second, when you make that sort of money, even though it's on paper, I wasn't going to become a policeman. I wasn't going to become a plumber. I didn't care about being a builder. I wanted to become a stockbroker. Well, in fact, there was two goals. One goal was to become a wallaby playing rugby. The second goal was something to fall back on just in case that achievement didn't actually occur, which was the stock market. I was aggressive about my rugby career. I played to New South Wales country and unfortunately snapped my cruciate ligament in my knee. Has anyone had a knee reconstruction before? Well, basically what they did, they cut down into my hamstring, put in 2 bolts into my knee and replaced my ligament. 12-month rehabilitation to get back to normal activity. Well, I decided to go back to rugby 12 months to the day. Against the same team, not quite the same bloke, guy tackled me that looked like Jonah Lomu and put me in row 14 of the grandstand. And unfortunately, my ligament snapped again. So they had to cut into my good leg. They dug into my left leg, my hamstring, pulled that out, put 2 more new bolts in and tied it in. At that time, the surgeon said to me, look, we've taken the hamstring from the right leg, we've taken it from the left leg. I'm not telling you where we're going next, but I suggest you give up the game of rugby. And I did. So as in my last year of university, I decided to concentrate purely on the stock market. In my last year, I did a thesis on how IPOs outperform the rest of the market. So drawing on the experience from at the age of 14, that gift my mum gave me. Now I wanted a cricket bat, and yes, look up happy in the dictionary, you wouldn't have seen a big smiley face of me at the age of 14. But now I realised that was the greatest gift my mum ever gave me. That gift got me interested in the share market. Not just the share market, but also taking control of my own financial future. So I encourage you, if your kids aren't downstairs at the youth forum, I encourage you to teach them the lessons they've created or that you've been taught over the next few days. There's one thing that I do realise, that the secret of creating a huge amount of wealth isn't necessarily timing, it is time. And what do your children have more of than you? Time. 2 years ago, my son was born. He was born to a gift. He became Australia's youngest leveraged investor. He was 12 days old and he bought $300,000 of investment with a $300,000 loan. Do you think he's happy about that? It's a good start in life. Our goal is for him, when he goes to kindergarten, to become a self-made millionaire, all from his own gift. Unfortunately, I'm still trying to work out how he's going to be paying for the interest expense. At this stage, his dad's helping him out, like my mum helped me out initially with the education. He's a little bit young to understand the principles of investing at this stage, but he's about to sit his stock market courses and his exams in a few years' time. He'll be about 4, I think. Looking at some of the stockbrokers in the industry, you'd probably be a pretty good qualified one, actually, to point it out, or financial planners at least. So the share market was a really interesting game for me. My last year, I did a thesis on how these IPOs outperform the rest of the market. Now, through a 10-year period, If you invested in each and every IPO, this is the results of the 132-page thesis I did. If you invested in each and every IPO, bought them through the wholesale market, through the IPO process, and sold them the very first day they listed on the market, the average return was just under 30%. So what had happened with Woolworths was very similar to the rest of the market. So who in the room believes knowledge is power? Well, it's not exactly power, because what do you need to do with that knowledge before it's going to create wealth for you? You've got to apply it. So knowledge only becomes extremely powerful when you apply it. So I had 10 years back testing, average return 30%, just under. So I thought, I've got the knowledge. I had $24,000 in total saved up. I thought, I'm going to have to take action and do something. So I invested 24 grand into an IPO, which I paid $1 a share. Now, the very first day they listed on the market, they traded at $3.50. My exit strategy, sell day one. In fact, if a company listed at 10 o'clock, I still held the shares at 10.05. I haven't been a disciplined investor. I haven't stuck to my formula. Sell straight away as soon as they list on the market. Because the thesis actually looked at how the shares performed after that first day, but they generally just trade with the rest of the market. So where the immediate return was to sell day one. What I made was 5 investments over 8 months. In that period, I turned 24 grand into almost $500,000 at the age of 19 and 20. Graduated from university at 19 with a Bachelor of Commerce with a major of Finance. In that time, I was approached by a small stockbroking firm that was located in my hometown. They approached me at university because I was extremely passionate and achieved some really good results when it came to investing. I'd made more money from the share market in such a short period of time than any of the other guys that had been working in that office. So they employed me as an assistant 2 weeks before a period called the tech correction. What happened with the tech correction? Because all of my money was tied up in one company. My investment philosophy put 100% into the IPO process. So I realized at a young age that every time you actually took money out to buy gifts for yourself, to spend it on needs and wants, there's less money in the investment pool, which means your returns down the track are going to be lower. So I kept all of my money. I didn't take $1 out of the market. I turned 24 grand into almost 500,000, and all of that money was tied up into one stock during the tech correction. Now, I paid $1 a share for that company. The very first time an opportunity I had of selling that share, it was trading at 35 cents. I had all of my money tied up in that. So when I was looking in the share market, I could deal with all the pleasure associated with making money. Like, the share market offers the highest potential return than any other asset class there is available. That's what I experienced. 24 grand to $500,000 very quickly, 8 months. And all of it disappeared extremely quickly. So I didn't sell. Obviously, I didn't stick to my exit strategy because I hoped the share price will go back up. That didn't happen. I was sitting down with a mate who was studying tax at the time, and he was just having a conversation. We were having a few beers. Over a beer, he just asked me an ad hoc question off the cuff, what I'd done with the funds to pay the capital gains tax liability. Because I'd been realising the gains. I'd bought and sold. When you realise gains, you've got to pay capital gains tax. So this conversation was in June. I was about to be hit by the ATO with a $200,000 tax bill. 200 grand. So life was really tough at that point in time for me. I'd gone from being bulletproof, thinking I was going to become the next Warren Buffett, but in an age where I could actually afford to use the money. How old is Warren Buffett at the moment? He's 150 years of age. He's got to be. He's 78 or 79 years of age. He turned in August. So I'd realised that I'd made a huge amount of money, and then to have it all taken away from me, it was very similar to snapping my cruciate ligament for the first time. That was my goal. I went home. I said, look, I can deal with all the pleasure associated with making money from the share market. I can't deal with the pain. What I was able to do with the tax bill was, because I received the advice in June, I actually just sold my shares and used the loss to offset the gains. I sold my shares at 8 cents in the end. I had all of my money tied up. Everything was tied up in that company. And some people look at it now and they say, during the technology boom and crash, you turned $24,000 into 32 grand. That was a pretty good result. I'd made money. Not too many people made money through that time. However, they failed to see the roller coaster ride that I went on. So I went home and I was sitting with my grandpa. I was living with my grandpa at the time. I said, look, I can't deal with the pain associated with the market. And he pulled me aside and said, look, this has got nothing to do with your knee injury. Like every person that go on to true success, whether or not you're Greg Norman with golf, Donald Trump, Tiger Woods, even now, You look at it throughout their life, each and every one of them, whether it be business, Kerry Packer, or investing, Warren Buffett, or Tiger Woods when it comes to golf and sport. Each and every one of them have been through ups and downs. But what dictates those people to go on to great success is their ability to learn from their mistakes and get back on the horse. The next day, my grandpa took me into the office and said, look, just learn from your mistakes and you'll be able to move forward from this. So I went to the office with a commitment that I wouldn't make the same mistake twice like I did my knee. I would never invest in the share market unless I knew a way to enjoy all the upside associated with the share market without the downside. It took me a while to discover that strategy. But something that I don't explain too many times to people is that during that period, the stockbroking company I was working for, because basically stockbrokers make money when they trade. So the activity on the share market during the technology correction and then the crash dried up extremely. The stockbroking firm I worked for, it was a branch of a bigger company. They decided to cut back all of their costs, which involved closing down the branch I was working for. It was in Erina. There was 4 guys and myself as an assistant. He came up and said, the boss from Sydney came up and said, look, unfortunately, Justin, we don't have a job for you anymore. Unlucky, you're being made redundant. I've been working there for a matter of months. So going from stock market's it, hero, Warren Buffett, making $500,000 to losing all the money, possibly facing bankruptcy, and then looking at the Centrelink queue to look up for another job. Now, this was a job I thought of my dreams. I wanted to become a stockbroker. I had all the qualifications to get there, also the lifetime experience of having to make money from the share market, also the pain associated with losing it. It was an absolute must for me to be given an opportunity as a stockbroker and also to maintain my role with that company. So in the face of adversity, when they said basically, look, you're being made redundant, I turned around and said, don't make me redundant, give me a promotion. I asked for them to give me a promotion to work as a stockbroker. I was assistant, working for a few months. He goes, well, you're not listening to me, Justin. We don't have any money to pay you. So it's putting up a few hurdles. I said, look, just make me a stockbroker. I'll go work in Sydney. Happy to do that. I was expecting that move anyway. Don't pay me a cent. I'll do it for nothing. So he had to employ me. I had all the qualifications, all the experience. He'd realised the ups and downs, and I was basically going to work for nothing. So he gave me the opportunity to work in Sydney. 2 years later, I was approached by Macquarie Bank, Australia's largest investment services company, an investment bank, to go work with them. Not just approached, they handed me over a huge cheque to take my IP. I went over there and worked at Macquarie Bank for 3 years. I did my stint there, which created now some of their funds that have got a few $1 billion invested. There's a few hundred people that are invested just on the back of the IP that I took to Macquarie Bank. What was so extremely valuable that I had to go over there with was that I discovered a strategy where you can enjoy all the upside of the market without the pain associated with losing it. After 3 years, I realised that Macquarie Bank wasn't necessarily serving me or my clients. It was serving one person, and that was the bank itself. Does anyone know what Macquarie Bank is renowned for? Well, there's a name for it, Brent. The Millionaires Factory, the production line to millionaires. Out of interest, who in the room thinks that they're referring to their clients? Who are they referring to? Their staff and themselves. Now, what we decided when I set up my company was to change that, because that situation stinks. That's not a win-win situation. Like, who in the room has been happy with the performance of their superannuation in the last 2 years? Some people, but they've probably got their self-managed super fund. Most people are disappointed. Why? Because you've lost 30%. Do you know what financial planners and fund managers have taken from that 30? Oh, possibly 4 or 5%. Irrespective if they make you money or lose you money, they're still going to be paid. So is that giving them a huge incentive to make you a lot of money? Not at all. That's why I decided to set up my company. We're the first company in Australia, and still the only one that I know of, that will do transactions on the stock market for nothing. Zero. Transaction cost, brokerage, zero. The reason why we do that is to avoid the conflicts of interest that exist in our marketplace. Because if you call up your broker and go, hey, what should I do with my National Australia Bank shares? If your stockbroker says hold, how much money do they make? Nothing. What happens if they say, look, sell NAB, I prefer Westpac? How many times do they get paid? They get paid twice on the buy and sell. Do you see how there's some conflicts of interest that exist in the marketplace? The bank itself only makes money when you trade. The brokers only make money when you trade. And I'll take it a step further. When does the Australian Stock Exchange get paid? When you trade. No wonder everyone and every education program that you go to is to make you actively trade, because it stems from the ASX. in 2 booklets, Understanding Options and Getting Started in the Share Market. They're both about 70 pages long. My entire business is focused on 12 words that's a part of that. 12 words. And before we get into those 12 words, I'd like to explain the most successful investor is Warren Buffett. So isn't it important to maybe follow him rather than stockbrokers or the ASX? What's Warren Buffett's preferred holding period? Does anyone know? Forever. That means apply the mindset to your shares as you do property. If everyone followed that same mindset for their super as well as their share investments, how much money would the ASX make? They would go broke. How much money would your broker make? Nothing. How much money would the brokering house or the bank make? Who makes and controls 80% of the Australian stockbrokers? Banks. Banks. So we're looking at the banking industry, the ASX, that's how they make money. As a boutique, as an individual, we've got the capacity to change that around. The only time we charge or we make a profit is through performance. How much are you willing to pay for performance? How much? Well, it depends. I'm only going to be paid on performance, so it's irrelevant, isn't it? If you don't make any money, how much money do I get paid? Paul Keating once said, back a person that is motivated by self-interest, because you'll make money each and every time. Do you think if all fund managers looking over you after your superannuation, if they were only paid on performance, do you think the performance would be a lot better than what it has been in the past? Yes. The banks can't afford to go to performance fee only, because if they did, they'll go broke within 3 months. Because what are their expenses like? Huge. So look, that's sort of a bit about my company. The reason that we are Australia's fastest growing investment services company, that's stockbroking and financial planning, is because we've worked out what our clients want. They want to make all the money associated with the share market and risk how much? Nothing. Nothing. No risk with high returns. At the same time, you also want to pay for someone only when they add value. If a person doesn't add value, what should you do? Fire them, kick them to the curb. Unfortunately, the majority of people you've already paid before you've worked out that they haven't added any value. With us, that's not the case. So the presentation here, I've got 30 minutes to go, actually 22, so you don't have long. It's valid as of today. We are licensed. JB Global is a licensed financial planning and stockbroking firm. I'm licensed as an individual to talk about this sort of stuff. This information is general information only, which means I haven't sat down and considered your personal investment circumstances when I put together this presentation. From here, what each and every one of you will get the opportunity to do is to sit down with one of our licensed investment advisors here in Queensland.